Looming government shutdown. It's a tricky time for Congress to be without a speaker, and it looks like an agreement on a new leader won't be easy. House Republicans voted yesterday to nominate Majority Leader Steve Scalise to the role, but since then, he has struggled to gather the 217 necessary votes to secure that gavel. For more here, let's bring in James Lucier, founding partner of policy research firm Capital Alpha Partners. James, a pleasure. Thank you so much for joining us today. What's the latest that you're hearing?
It's great to be here, Kelly. I love your show.
Oh, thank you. What's the latest that you're hearing?
Well, the latest I'm hearing is that Speaker McCarthy met with the House Republican Conference today and outlined some plans. He outlined a possible strategy for getting appropriations bills done. He tried to answer any questions that they had. He said that he wasn't going to make side deals with any of the members, as Kevin McCarthy did when McCarthy was running for Speaker. But the reality is that I don't think he moved any significant number of members. He's still got more than 100 members to go before he can lock up the 217 he needs. So we're all expecting this drama to take some time. There's been a suggestion that some Jewish Democratic members might support Pat McHenry as an interim speaker for a period of time, a couple of weeks, couple of months, end of the year, just to make sure that the House is no longer paralyzed and that we can move forward on a package of aid for Israel and perhaps also Ukraine and other purposes.
Interesting. So instead of throwing wide support behind Scalise, it sounds like people are sort of pulling back, maybe looking at keeping McHenry in this temporary position for some time. But how much authority does he or Congress have if this remains the status quo?
Well, McHenry is Speaker pro tem, but the rules are tricky. Right now, he's Speaker pro tem under a special 9/11 era emergency succession rule that says that if you are on a list that the Speaker keeps in his desk drawer, you get to be Speaker for 3 legislative days. But it's possible to be designated Speaker for more purposes in a longer period of time. And you can also be voted in as Speaker, in which case you have many more powers. So I think it's quite possible that the House will choose to vote for McHenry as Speaker pro tem with a more complete package of authority to handle appropriations bills and continuing resolutions and other bills in the usual way. That's not ideal. It doesn't mean he has enormous leverage to move the Republican conference, but it certainly means that they'd be in a position to move expeditiously on these emergency bills.
And what would it mean for keeping the government funded past the November 17th deadline and avoiding a shutdown?
I'm worried about that. I mean, I'm not hearing anything right now about a strategy for a continuing resolution. I think that whatever shutdown we see on November 17th is likely to be a relatively short one, less than a week or two, because there is a discharge petition ready that would be able to take a Senate-passed continuing resolution and move it to the House floor, where it would almost certainly pass with a bipartisan vote. The problem is, though, that I'm aware of only one discharge petition that's available. So this continuing resolution would essentially be a one-and-done type of thing, and we'd have to find some new way to get to the end of the year.
And I don't know how much you or folks down there typically follow bond yields. This is all kind of new in a way. But look at what happened just the top of this hour. They issued 30-year debt. There wasn't as much demand as hoped. This is part of the Treasury having to upsize its auctions to fund the deficit. All of this has been much bigger than expected this year and could persist into 2024. So at some point, I do wonder how much pressure the market will put on policymakers and what that will even accomplish, given the dynamics you're describing.
Well, Kelly, you've identified a very important point. This is a huge shock to Washington. We've gone on for decades where it never really mattered how much we spent. It never really mattered how big the deficits were. The United States was always able to finance those deficits. But with the massive expansion of debt we've seen during the COVID pandemic, it seems as if a line has been crossed. We don't have the debt coverage ratios we used to have. We don't have the financial flexibility. Suddenly, those credit ratings from the major agencies may actually be meaningful. And I think that Washington is very well aware that the bond markets are paying attention. And Washington's also aware that the short-term Treasury bills are rolling over in large numbers, and we'll have to refinance them at some much higher rate than we're paying now.
Exactly, which will increase the pressure as well. Can't really see a path from here to there. James, will bring you back if you would.
Great. Glad
as
to be
this plays
back.
out. Thank you so much. much. James Lucier
You're
joining us.
my favorite, Kelly. Love to come back.
Thank you, Jake, joining us from Capital Alpha Partners.